I don't know about the cash burn in new companies and all of that and stuff. There's definitely a lot of calorie burn given the sort of walking that takes place in places like these. But let's talk about cash burn itself. Should we say that incrementally now all the burn has stopped and now whatever business comes in will be cash flow accretive for you?
Yeah, I think if you look at our history of cash usage over time, a bulk of it has shifted away from funding operating losses, which we had to do when we started the network, towards capital in projects, building these facilities, buying trucks, or towards acquisitions. I think for us, the advantage is every incremental package that now comes in is highly profitable because we've already sunk these costs. And so over time, we don't think operating cash flows, will continue to suffer. I think we will continue to invest in building capacity, but from an operational standpoint, we'll be profitable.
It's been a little over a year that you've been listed on the bourses. What has being a public company so far taught you?
For us, to be honest, we found, surprisingly perhaps, that running a public company actually is easier than running a private company in some ways. The biggest message for us has really been, on a regular basis, being able to communicate to a wide group of investors, a very wide group of investors, exactly what our strategy is. So it's forced us to really think about elements that we perhaps in the past had not explained as well. Go out and explain to people why building these kinds of facilities, why buying trucks is important. So our communication's gotten sharper. Our discipline in terms of meeting our quarterly numbers has gotten sharper for sure. We're better at forecasting, which is important in our business.
There is a bevy of PE investors who are looking to, perhaps offload their holding in the company. How do you manage that, or how do you go through those troubles when it has an impact on your share price?
Look, I think our job as the management team really is to build a great company, and that's what we're trying to do, really, right? Some investors will like the story and will buy in. I think there are enough people who we feel are interested in investing in, India's largest logistics company. And our PE investors ultimately, as their horizons end, they may sell the stock at times that they deem fit. We can't do much about it. So we don't think about it too much because it's not something we can control on a regular basis. The share price, how they decide their investment strategy, these are not things that we allow to influence our decision making about the business.
Your father's a finance professor. He watches a lot of CNBC-TV18. So the price of delivery, it was offered at a little under 500. Thereafter, it zoomed to a little under 700. Now, as we speak, a little under 400. Those sort of gyrations that we see, how do you keep yourself immune from that? And be honest, that would have affected you at some point, right?
Yeah, look, it's an emotional shock, of course, when you go public. As a private company, you're not used to seeing your company's price go up and down. And of course, it's an emotional shock, right? When the company's price went up, obviously at that point, we were ecstatic, and then it went down and we were wondering what happened. But as with all things in life, you make your peace with it and you say, look, I'll focus on what I can control. And since you brought up my father, I think one of the things he taught me is that the value of something and the price of something are not always the same. We believe there's value in what we're building, and I think the price over time will reflect that.
So you are sure of the value that Delhivery has to offer,
yes, we are.
Even at the market cap that it currently has, and the potential that there is a lot more. SoftBank wants to exit in the company. So if there is value in it, would you then look at people or would you prop up some other investors around you to go ahead and perhaps purchase that stake?
I think my job is to do the best I can to communicate our strategy, and the investor's job is to decide whether they want to invest or not. So I go out, we meet investors, we tell them what we're doing. We explain to them India's a large market, somebody's going to build a large logistics company. We think we're in pole position. Hopefully they'll invest.
I was reading a report where Amazon's captive logistics is actually a lot bigger than some of the largest logistics players in the world. Case in point, something like FedEx or UPS in terms of parcels delivered. Do you think that there is a threat like that which looms in India? How do we view that?
I don't. I think the circumstances of the US market are very different from the Indian market. I think Amazon runs a successful self-logistics business in India as well. But we're very confident that the cost of self-logistics is significantly higher than the cost of third-party networks in general, and certainly higher than the cost at which we serve these same clients. So first of all, if you're a third-party shipper and not, Amazon yourself, Delhivery offers a competitive service. We're cheaper. We get everywhere in the country. We're exactly as reliable or faster, in fact, in some locations than an Amazon. And the last bit really is, we've spoken about this in the past. In the US, I think, and wherever logistics companies have failed to pass on efficiencies to their customers, that is a profit margin that ultimately a captive will go and attack, right? Amazon's effectively saying, I can do this cheaper than you can. In India, we don't believe that's true.
So in that case, how do you view your yields over a period of time. What have they typically been like, and how do you intend that they go forward given the efficiencies that you will be passing on to the customers?
See, we will continue to pass on these efficiencies based on the scale that we acquire over time, and obviously the operating efficiencies that we engineer through our network. As an example, when we moved from using smaller truck formats to larger formats, the cost of trucking for us declined. Now, when the cost of trucking for us declined, we had two choices. One is keep the excess margin that we were generating, but ultimately we have to, for lack of a better word, reward our customers for rewarding us and trusting us, with their business. And so we went back and said, we become more efficient, and so we'll pass on these benefits to you over time. And that's the way everybody wins.
So you would obviously chase customer growth more than keeping the overall margins that you will get off all the scale. Is that a strategy?
In India, for the foreseeable future, that is what is required.
So in that case, how do the 16-18% sort of margins come about?
We're not unprofitable when we pass this on. Remember that we pass on price benefits after our cost advantages come in. And we're already profitable on a unit basis on all of the parcels and all of the freight that we deliver.
The last 5 years, your revenue CAGR has been around 45%. The first half of this year, of course, given the circumstances, soft at around 8%. Do you, what do you see as growth, sustainable growth for your revenue?
I think you have to break it up, right? When you look at our business, first of all, about half our revenue comes from the e-commerce segment. In general, if you take the assumption that e-commerce will grow anywhere from 15 to 20% a year for the foreseeable future, let's say the midterm, I think Delhivery will grow our e-commerce business at least at that pace, if not faster than that. Because ultimately we'll either maintain market share or we'll grow market share. On the PTL side, I think our growth has been slower because we were digesting our acquisition of Spot On. So we were trying to make sure that we get all of the operational integration right. There were customers to be spoken to as we transitioned them. And so building that base has taken us 5 or 6 quarters. Now going from here, we have a solid base. I think now we'll go out and really attack the market and try to grow the PTL business much faster. How fast can we grow? I don't know. As an example, our PTL business has grown 23% year on year. Right? Now, our aim obviously internally is aggressive growth. Like I said, in 3 years, we want to be 10% of the market. Today, we're very small and insignificant. And that will translate to a pretty large double-digit sort of overall growth rate. And all of our other businesses, supply chain services, FTL, cross-border, these will be somewhat more opportunistic. There's a large space for us to grow into, and we will show large growth in these segments, but it's hard to predict exactly what that will be.
You are a fitness enthusiast. What does, being a triathlete or being in the fitness discipline teach you about business? What inspirations do you take from there?
The thing they say about running is that the hardest part is putting on your shoes. Once you start, it's all easy. I think what it's taught me really, and more people in the company really, we're a fitness addicted company in some ways, is that really the hard part is getting started, right? And after you get started as a company, our logic's simple, don't quit, right? I think India's a long game. Building a company of our size with our vision is going to take time, it's going to take patience. There will be ups and downs, we've had ours. And you just have to stay patient, stay the course, drive straight, and that's what we're trying to do. So stay to the straight and narrow, don't look around, run hard, put your shoes on. I guess that's what we've learned.
Of all the companies that came to the street around you as well, what have you learned from their journeys, and what is it that you respect about them?
I think the biggest thing with Zomato that you have to respect is they were the first company to go public in some senses. They showed the way. Courageous move, they went public. And Dipinder has talked about the challenges of navigating that period. There's a lot to learn from how they've gone public. I think the manner in which they've chosen to communicate the Zomato story, the way they made decisions in the last 2 years has been fantastic. And so we do look at them and say, look, what do we need to learn from the guys who came before us? You learn also equivalently from someone like a Nykaa who had, a breakout listing. They've managed being a public company wonderfully. And so we look at the management team, we look at the experience that Mrs. Nair has and say, look, what can we learn from her, the way she manages investors, the way she communicates the story. Yeah, but otherwise, to be honest, every company writes its own story, right? And so will we.
And outside of work, what are the other things that you like dabbling in? Is there any startup that you wish to invest in? Is that something that you do?
Not very actively, to be honest. I work and then I have triathlon, which is 14 hours a week, right? So that doesn't leave me with much time for anything else.
That's wonderful. We won't take much of your time, Sai. This has been a pleasure.
Lovely to meet you.
Thank you so much.
Thanks.
Canada